All right, and welcome back to another case study. We'll get straight into it. As always, I'm a developing student, and these are just my interpretations on price. So this is a Wednesday. We had FOMC minutes, and honestly, when I was doing this backtesting, I thought it was the actual FOMC when I was actually backtesting it. So that's why I really didn't have too many like 950 or 1050 usual annotations that I had. But this was FOMC minutes. But this was traded exactly like in I couldn't tell that this was just FOMC minutes. So FOMC, the meeting is the FOMC press conference is different than the actual FOMC minutes. But this day, like traded exactly like FOMC minutes. As we can see here, look at what price is doing right here. We're traded into a daily imbalance right here. So overall, the direction is that daily imbalance here. And notice, well, I want to bring the attention to this down close candle here. If price wants to expand, this will be a perfect candidate for an order block. We're trading into a higher time PD rate, and look, we have no wick on that candle. So I think that this price could be sensitive within the future, and this price could be traded back into and referred back into. So as we see here on ES, we have swept sell side, and we are within this daily imbalance right there. All right, and here's the hourly structure on E-mini S&P, just denoting that we finished this higher time frame market maker sell model. We have a market maker buy model, and then we have smart money reversal first stage, and then possible second stage, and then low risk entry first stage, and then second stage right there, and we end up taking sell side. And here is the price action we had today. As you see here, we had buy side taken, SMT with low resistance liquidity signatures, and then we end up repricing the sell side. And here is the 5-minute chart. And I really thought this was FOMC, but it really acted just like FOMC. So that's just something to have a case study with and just to back test with. So here we have a bunch of low volume within the market, not a lot. And notice before this news folder drops, we really don't have anything. And if I'm trading FOMC, I'm going to mark out 2 p.m. and then 2:30 p.m. So I really thought this was actually FOMC, but it didn't end up being. So we have low resistance liquidity signatures at these highs here. Right when that news folder drops, we end up displacing lower into the sell side liquidity. Notice how we barely purchased low. We barely purchased low on ES, and then we come back up. We have a change in state delivery. We close above this. This now becomes our order block. This now gets traded to right here. Then we have another change in state delivery here. And then now this becomes a propulsion block. So this will be very sensitive as it was here. We don't want to see mean threshold of this candle get traded or closed below. Notice how the wick is okay. It's okay to have a wick like that. Notice how this candle opening price is very sensitive. And where do we skyrocket it from? As soon as the propulsion candle is confirmed, that's when you're going to have your explosive moves. Right there. And notice how it's also going to link up with the time. We're going to have that explosive move with all this low resistance liquidity signatures right before 2:30. And notice how 2:30 pretty much puts the high. Pretty much puts the high of this fractal price. So we have 2:30 putting the high. And yeah, this was the 2 p.m. manipulation. And then we end up having repricing the buy side here. And now we're looking at 2:30 opening price. We have buy side liquidity taken. So now we have high resistance liquidity conditions above market price. And now we have kind of these failure swings within the market lower. And notice as well, as noted earlier, we still do have these failure swings. So this was just a manipulation move lower to manipulate higher to then displace back lower. Notice as well, what is the higher time frame? What does the higher time frame want to do? ES wants to trade within this daily imbalance lower here, and also wants to take this sell side here. So we're already within a higher time frame market maker sell model. It would not make sense for us to probabilistically head higher here. It's just not as probable. And here is a breaker in price. I honestly don't know what I had marked out here. I kind of wish I did again. That's my bad, y'all. But basically, we end up having 230 price. We end up not really doing much here. I'm not really interested in here. We end up taking buy side. We end up having a fair value gap here. Notice here how we have this inversion here. If this were to get inversed immediately, and we would have had fair value gap in, fair value gap out, I would have more been open to trade this fair value gap here. But I want to wait because we haven't had like a real market structure shift. We generate these lows, we come back up, we don't take this high here, and then we end up displacing lower. So as soon as we have this market structure shift right here, or maybe a change state delivery, maybe we have a fair value gap in, fair value gap out. This now becomes a much more likely candidate that we are going to reprice lower. So right here, fair value gap in, fair value gap out, that gets traded to. That's very sensitive. They end up having a fair value gap lower. Boom, right there. We end up trading into. Maybe you want to wait for the market structure shift. Cool. Boom, market structure shift. Order block right there. Order flow confirmed. And then we don't really have too many retracements within this model. It's kind of just a slow melt higher. And we end up having a stop on profitable stops here, and then we end up displacing lower. So that's kind of just the fractal price that was within place here. And I really didn't have too much annotations for this day, but I'm just denoting that this was FOMC meeting minutes, I believe. I mean, you can look back and you can backtest for yourself, which is what I would really recommend you doing, just to look at this fractal price. But basically at 2 p.m., we end up displacing higher first, originally taking buy stops here, and we come back lower. We end up barely purging sell stops. We barely purge sell stops. So this likely isn't going to stay within the market. This likely isn't going to be an intermediate term low or a long term low. I would say more like a long-term low. But this likely isn't going to hold for long. And then we end up coming back up, repricing the size, taking buy-side liquidity, forming SMT. And then we have market structure shift, fair value gap in, fair value gap out. Boom, that gets traded to. This happened at a certain time, at 2:30, 2 to 2:30. And then if we know that we are bearish on the higher time frame, we want to see that daily imbalance get traded to, that daily buy-side imbalance get traded to. That's what ends up happening. 3 p.m. puts us right here, and then we end up displacing lower. We can come back up, running on these stops, these profitable stops here, and then we end up displacing lower. So yeah, this is overall fractal, and I didn't really do the whole day. I just did because I really thought this was the FOMC, but then I went back and I looked back on it, and I was like, oh, this is just FOMC meeting minutes. So I was honestly a little bit confused because this it looks exactly like FOMC, and this is exactly how I would expect FOMC to pan out. Anyways, I appreciate y'all, and I will catch you guys with the next one.